Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, October 8th, 5:04 p.m. Eastern Time, coming to you with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at the levels you need to know for next week, and update the world famous 21 over 21 leaders list. Let's get right into it. State of the market. We're in a correction. You can check over here at the trend gauge. Leaders, neutral, still hanging in there, quite a few of them. But the ETFs that we track that are part of the G5, their charts are really not very healthy at all. So definitely taking caution on our exposure. You can see the short-term trend. We're still in a downtrend. Did get above, attempt to get above the 21-day exponential moving average on the S&P 500, just fell a little bit short on it by the end of the day today. Medium term, 50-day moving average, we're looking at neutral, pointing toward bearish as having problems with the big end indexes getting above there. Small and mid cap indexes are have all of their moving averages just about flatlined and bouncing back and forth between there. Long term, we're still above the 200-day moving average across all of the indexes. So what happened today? We opened with a weak jobs report. Volatile overnight. Weak jobs report didn't have a huge impact, but we did trend lower and weak most of the day. S&P 500 and NASDAQ 100 finished the week below their 21-day exponential moving average. S&P got above it on Thursday, couldn't hold it. Not a good sign here. G5 clear laggard today, down 1.31%. It's one of the reasons why we're limiting our exposure. That, along with the action of the overall indexes versus their moving averages. S&P 500 down 0.2%, NASDAQ 100 down 0.5%, Dow Jones Industrial Average just barely down. Mid caps down 0.6%, small caps down 0.7%. Let's take a look at some market facts, but before we do, let's take a look at the team here at Revere. Active management, we strive to make sure that our clients never get hit hard in a 2008 or 2000 scenario where the markets really turn bearish and some advisors just stick their head in the sand and tell their clients to think long term. We're aware that long term the market trends higher, but that long term can be made up of some intermediate terms that can be very painful to your portfolios. We showed our expertise during the COVID crisis, getting out, getting in. We took some on the chin during the stealth bear market in growth stocks earlier this year, trailing the indexes this year, but over a 24-month period, we're still firmly above, beating the S&P with less risk over the last 24 months. If you're interested in this approach, give us a shout. You can email any of us, Dan, Tim, Hunter, Mural, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. Let's get into the charts now. Here's the S&P 500. Let me blow this up a little bit. And you can see here, volatile week. We closed negatively under the 50 and the 21 last Friday, and then had a bad day Monday. Consolidation days Tuesday, Wednesday, and then a big gap up on some news of averting the debt ceiling crisis. Gap up, but closed at the low of the range today. Tight day, but just barely above the 43.96 21-day exponential moving average. We battled all above it all day long. You look at a 5-minute chart here, you can see really it was a tight range. Any attempt to sell off got bought. Any attempt to rally got sold. Tight range. So let's see if the market can make up its mind next week. You can see this little purple line, the 8 EMA, curling up now. That's a bullish formation. So really what we want to see is that get back above the 21, and then the 21 get back above the 50. That's the red line, and that'll be a healthy situation for the markets. NASDAQ 100, tough Monday, Consolidation Tuesday, Wednesday, gap up Thursday, but failed into the declining 21-day exponential moving average. You know, we use this moving average a lot to gauge short-term trend of stocks, and then no strength at all today. Closed right on the 8 EMA, and you can see relative strength lagging over the last 3 weeks in growth stocks. And usually when you see lagging in growth stocks, you'll see strength in the Dow Jones Industrial Average, and that's the case here. Again, this consolidated along with the rest of the indexes, gapped up on Thursday, ran into the 50-day moving average, which is declining, and stopped right there, and then another tight day today. So it's above its 21, and the 21 has curled up along with the 8. The Dow acting pretty strong relative to the other indexes. Mid caps continue to be in this long consolidation, battling between their 50 and their 21 and their 8 above the 200. This is really just flat EMAs, flat moving averages really don't provide much in terms of support and resistance because they're trendless, and that's kind of what you see up, down, up, down, up, down with mid caps and also with small caps here. Same situation, tight with the EMAs, couple of dips below the 200, but never more than 2 days below before we got back above it. But now you got the 50, the 21, the 8, and the 200 all bunched up here on the Russell. How is this going to resolve? That is a question that everyone wants the answer to. So let's go to some market facts right now. And I talked about the weak jobs report from a news standpoint. Headwinds for the market right now include rising interest rates and a strong U.S. dollar. So let's show TNX here first. This is the 10-year. You can see the breakout last week, pull back to the ADMA, and a gap up and hold the gap today. Now it's in this high 1.5s to low 1.6 area, which was a lot of congestion going back here in March and April. We're kind of extended on an ATR basis also, so we'll see how this resolves. And then the dollar index UUP, you can see this broke out of this cup and handle last week, pulled back to the rising 8, and it's sitting right on the rising 8 here. Both of those situations are headwinds for equities. As far as rally attempts go, today's day 4. Since we formed a low in the indexes, the negative as part of that attempted rally is the S&P and the NASDAQ 100 have not been able to hold above their 21-day exponential moving average. As far as our portfolio allocations go, we continue to be less than 2% away from exiting, and a lot of that is going to have to do with how the S&P and the NASDAQ 100 react here to their 21-day exponential moving average. Sector strength continues to come from oil and banks. And let's take a look at some key levels here on the S&P 500. This is really what I want to highlight here. So key level here. So here's what we want to do. The most bullish scenario would be if we were able to get back above 44.38. That's the 50-day moving average here, 44.38. Acted as resistance when we came into it on Thursday, which is natural. And especially two-day at the top of the range up off the low, a little bit of a pullback. Anytime you have a move and you can hold above half of it, it means that move is still intact. So holding right around the 21 here is okay, but you want to see strength. You want to see us get back above it. So best case scenario, we get back above this 50-day moving average. If we're above the 21, which is at 43.96, which is where we're battling right here, that's certainly a bullish scenario, and that's something we want to see right away next week. But where we are right now, you can see with these arrows is in no man's land, which is this 43.75 to 43.96 area. And let's bring this up on a 15-minute chart. Actually, let's do it on a 30-minute chart. And you can see the battleground area here, 42.90, really 4,300, up to this 43.75-ish area. That's the battleground. Actually, we're right now in this no man's land here. I'm sorry, 43.75 to 43.96. So this was the top of the consolidation range, and we're still above it. But it can't get back above this area here to be more bullish. And then this that's the no man's land area that we're in right now, 43.75 to 43.96, which is below the 21, but above the top of this consolidation range. The pullback range, if we would fall into it, is this 43.75 to the 4,300 area. That's just a lot of slop and chop that we've seen over the last couple of weeks, and if we get back in there, it's certainly not beneficial to the market. If we would get back below 4,300, that would very definitely be problematic for the market. That means we're breaking back below this recent consolidation range. And then the next two levels down are 42.65, which is the 150 simple moving average, and 41.55. 41.54, 41.55, the 200-day moving average, which we're currently 5.7% above. So these are the key ranges to keep an eye on. Right now we're in this no man's land, 43.75 to 43.96. From a bullish case, you want to see us get back above this 21 EMA. So those are the ranges. That's certainly what we want to keep an eye on for next week. So 21 over 21 time. Let's get to that. And we're going to first show the list sorted in descending order by number, 2121. So first of all, let's take a look at the ones that got punted off of last week's list. And those were Dexcom, DXCM, breaking not only the 21, but also breaking the 50-day moving average. May need to form a base after this move up after the breakout. America Airlines, 1 week wonder on the list here, showed some strength but pulled back. It's got a downgrade this week. That certainly didn't help. PWR, just going sideways, not too bad, but the 21-day has rolled over and it's just below it. And InMode, this has been very volatile lately after some nice gains, and finally closing below the 21-day exponential moving average. So as far as what was added this week, we're going to start with the first four here. Live Nation. Oh, I didn't show the whole list. Let me show the whole list. So we've got 12 different sectors, 18 different industry groups represented. We'd own 4 of these as we get stopped on quite a few, and our stops were hit this week. And then the gap up, a lot of those are above our sell area. We're waiting for the market to firm up for some re-entry on those. So here's Live Nation, broke out of this cup and handle. Nice pullback after the breakout. Nice volume move up to close last week, and general consolidation this week. Certainly a reopening play. Silvergate, this is a bank with a crypto network, consolidated the last 3 days after this strong move. Look at the 60% move up over the last 2 weeks. Finally pausing here. Hopefully it'll go sideways for a little while. Put in a handle before it can challenge all-time highs. Definitely, when this thing moves, it really moves. Apps, Digital Turbine, showing some serious relative strength for a software stock over the last 5-6 weeks. Broke above the 200-day moving average. This is one of those dirty 30 stocks that pulled back 50% from its highs and then went sideways, gathered its relative strength. Finally, money starting to flow back into it, pull back to the 21 and the 200 here, and a very strong week for Digital Turbine and Net. This thing, we got stopped out on these breaks below the 21 and the 50-day moving average, but what a move over the last 4 days, straight up to new all-time highs. Sometimes it's the price you pay when you decide to stick to your stops. So let's go to some things that are follow-throughs from last week. Mosaic, very nice breakout out of this cup base at all-time highs. ETHE, this is Ethereum, the ETN for it, GBTC, also looking pretty good lately. You can see the relative strength in this over the last week and a half. Signature Bank, quite a few banks could have showed up on this list, but with the rising interest rates, banks certainly trending higher over the last couple of weeks. Palo Alto, this is one that we added to the portfolio this week on this break above, off the 21 and above this little consolidation, and then a lower volume consolidation day today. Airbnb, another reopen play, a little sloppy here, but finally showing clear relative strength over the last 5 weeks before pulling back this week. CBRE, a real estate, this is, I think, just a touch below the 21, but this is a very nice consolidation, and we'd like to have some diversification in this list. So that's a real estate development company. Tesla, hanging out, can't quite get through this 800 area here, but trending higher right along the ADMA and above the 21. Celsius bounced off the 21, pulled back today, but on lighter volume than the move up on Thursday. DigitalOcean, very strong off the 21, negative reversal today. Peabody Energy, this is a coal company, and 3 straight days of lower volume, tighter closes. Very bullish. Looking for this to hold this 21 and break above this 3-day area here and challenge new highs. Big issue with energy in Europe and China, and coal certainly in demand. Snapchat hanging around right above the 21 after this is one that shook us out a couple of times here, but keeping it on the list as it's maintaining at least neutral relative strength and good fundamentals. Bill.com broke below the 21, back above the 21 now, and above this 272 offer price. Affirm, one of the strongest stocks in the market, shook me out below the 21, and then just a massive move up on Wednesday and following through Thursday and Friday. AMBA, still holding part of this. Sold a piece of it on this dip below the 21, a piece that we added. The lack of confidence in the market stopped us out. Of course, we gapped up the next day in the market, but reversal today. And Devon Energy could have a ton of energy companies on here. This is certainly one of the strongest. Did its plus 20% pivot plus 20% move in less than 3 weeks. So you see it flagged here. Little 2-day pullback to the ADMA and back near all-time highs. Upstart, very strong run here. Pulled back, shook us out below the 21 here, bounced off it nicely. This is at the top of our list to get back into. And finally, Datadog, another one that gapped up, made some choppy but upside price progress, attempted to break out but failed as the market weakened a little bit below the 21, got us out, back above the 21 now, and that's your 21 over 21 list. And that's going to wrap it. As always, I would like to hear from you. I'm on Twitter at Vandenbord. Email don@revereasset.com. Phone 855-REAL-WEALTH. Wrapping up the week ending October 8th. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.